So we'll start off with being a subcontractor, because that's the most common for sole traders, and limited companies have it as well. So I'll show you this. The starting point is the same, but the reporting side is slightly different for each. So I'll go through each eventuality for you. So you've done some work for a contractor and you're going to raise them their invoice. So let's do invoice. And I am going to be really annoying here. Balfour BT, I've probably spelled that wrong, but it's a construction company, so let's just use them. I'm going to save that. So you've done some work, so day rate labour 1 at 250, well paid a contractor, and you're going to use CIS. Oops. CIS labour income. Now what this is going to do is it's going to sort out the CIS deduction. The other thing you need to be aware of is with the CIS, it could mean that you need to apply the domestic reverse charge for that. So domestic reverse charge, so you need the VAT income. So this means that you don't actually charge the VAT on, but it goes on your VAT return, and it needs to be accounted for in the VAT return, but you don't actually receive the money. It sounds a little bit complex, but if you just follow it through, it'll make sense. So we're going to do the domestic reverse charge. You can put in all the rest of the details if you want. But what it's done here is it's saying that the cost to your customer is $250, but they're going to deduct £50. So you're going to get the £200, and £50 is going to go to HMRC. The contractor will pay that over. So you'd approve that and email it. I'm not going to email it because it's dummy. So I'm just going to approve it. That'll go. What will happen here is you are only expecting them to pay you $200. So the amount due is $200. When the money comes in, the payment will be £200, and you'll just be able to reconcile it accordingly. They'll probably need to register you or check you, do the CIS check, make sure subcontractor and everything as well. But if you're in there, you're probably aware of how it all works. So that's how it would look. However, the full amount of $250 is recorded in your profit and loss. So just to look, I'm just going to quickly go to profit and loss report. And if we look at the CIS labour income, you can see it's the full amount there of the $250. But what's owed to you is the less the CIS, but the full amount is shown as your second. And what you'll find is you'll have a balance. And I'm going to go through these reports in a lot more detail when we come on to the report section. But what you'll find is that £50, that £50 that's owed to you will show on your balance sheet as an asset. And it should do. Where's it gone? Oh, it's currently in accounts receivable because it hasn't been paid. But basically, it will start adding up. Let's have a look. I did it in the report. Okay, it's not showing on the yet because it hasn't actually been paid. So it's still showing in the awaiting payment. But when that is then paid, let's go and mark it as paid, then it will show up. Because you only report it when it's paid. Payment. Well, it only goes on the return, sorry, when it's paid. So the 200 figure shows here, and then what happens is the CIS part is building up in a different account code, which you can see on the balance sheet. If I just change that to today, under current assets, you've got CIS asset there, £50. So basically that means that's what HMRC have got on your CIS account as tax paid to you. Now, if you are a sole trader, that will just continue to grow throughout the year. And at the end of the year, when you do your tax return, the balance here is what needs to go on your tax return as the amount of CIS tax paid. And then that will be deducted from the tax that you owe HMRC for the year. If you've had more deducted than you should have had, than the tax you owe, then you get a refund. If you're a higher earner and you haven't actually paid enough CIS yet, then you'll just have the balance left to pay. So that's how it works for a sole trader. For a limited company, it's a little bit different because you need to report it every month. So you would come into payroll and RTI filings. And you would come into here to update CIS for the month. So for the first month, you've had CIS suffered of £50. You do need to have your UTR on there, and that'll be your corporation tax UTR. You would save that, and then that will get reported and submitted to HMRC every month. If at the end of the tax year you haven't got any CIS liabilities or you haven't got any payroll to offset against what's set on account, then you'll be able to claim that back. But again, this is quite complex, so I would recommend you get your bookkeeper or accountant to help you with all of this part as well. But this is how to report it on a monthly basis anyway. So every month you need to add up what you've had that month and report it over to HMRC. So that's the subcontractor side. In the next video, we'll do the contractor side.